A case has been opened by the Central Bureau of Investigation, CBI, against GTL Limited. For the record, GTL is in the business of offering telecom network deployment, operations, and maintenance services to telecom operators in India and other countries. A case has been filed against some unidentified bankers and directors for allegedly defrauding a group of banks out of a total of rupees 4,760 crore by setting up numerous shell companies in order to divert bank funds. A bank consortium of about 24 lenders, including Canara Bank, Dena Bank, and ICICI Bank among others, provided loans to the company. Afterward, the company conspired with vendors along with some bank employees to siphon off the majority of the loan amount. Among the banks, ICICI Bank has been the hardest hit, having an exposure to GTL Limited of Rs 650 crore, followed by Bank of India at Rs 467 crore and Canara Bank at Rs 412 crore. Despite not having access to supplies of materials or goods, the company continued to extend advances to vendors. The perpetrators allegedly collaborated with GTL Limited to form a number of vendor companies to aid in the fraud. The company obtained short-term loans for a variety of business purposes by falsely representing that all of the money would be used for that purpose. However, most of the money was not used for that purpose. This is how the siphoning of funds happened and the fraud took place. 1. Massive advances were made to the alleged vendors, but a sizable portion of these advances was sent back to GTL Limited too. GTL also purchased fixed assets from suppliers using working capital funds. The business allegedly invested in various businesses by buying their stock. 3. From the respective sums of rupees 1,055 crore and rupees 1,970 crore for the fiscal years 2009-2010 and 2010-2011, respectively, rupees 649 crore and rupees 1,095 crore, respectively, were invested in short-term mutual funds as soon as they were disbursed. Following disbursement in financial year 2010-11, an additional rupees 135 crore was invested in fixed deposits. 4. The company also used the bill discounting facility, of which a significant portion of which had been invested in liquid mutual funds. 5. Despite the vendors' low net worth and recent incorporation, additional advances were given to them. The investigation further revealed that all of the vendor companies were formed in a short period of time, less than 3 months. 6. These vendors of GTL Limited all have the exact same memorandum of association. Due to the similar types of corrections found in each MOA, it is clear that they were all created by the same agency or source. A crucial point to keep in mind is that the RBI instructed LDBI Bank, one of GTL's lenders, in a letter dated April 1, 2016, to flag GTL and start a forensic audit. However, after 2 months, LDBL Bank responded on behalf of the consortium and advised against designating the account as a red flag and against appointing a forensic auditor because doing so might have caused a delay in the payment of the dues. The subsequent audit has raised serious red flags, including much lesser vendor purchases in comparison to the higher advance amounts given by GTL. Essentially, a significant portion of the advance funds were fraudulently returned to GTL by vendor companies. Against the bankers and directors of GTL, the CBI has filed a case. We will be keeping you informed on all the updates related to the matter.